Welcome back to Stocklabs for another market recap. And this week, let's see, we ended on January 21st. So, third week of January, and it was kind of a bloodbath. Market's been trending down all year, and some parts have been trending down for months, but we saw a real flush this week. I think this was probably the worst single week that stocks had, probably since the original COVID sell-off back in March 2020. It was pretty bad at the index level, pretty bad, underneath the surface and everything. So we'll just jump right into our major ETFs, see how they did. And yeah, so oil actually held up. Bonds have been holding up a little bit, even though, their sell-off kind of preceded all of the equity sell-off. They've possibly started to hammer out a little bit of a bottom here. If you just go by TLT. And then, okay, so the S&P was down 5.5% or more. Qs were down 7%, 8% at times during the week. The small caps were down 8%, and the Dow was down 4.5%. So nowhere really to hide. A lot of pain in tech, especially the more momentum type names. If you looked at something like the ARK ETF, it's just in complete free fall. There's no, there's no buyers for those equities right now. So it's kind of tough, for tech investors, which is a lot of investors given the history of the sector. Okay, and if we go back to our leaders in the tech space, it was a week to forget for them as well. So Netflix got absolutely destroyed on earnings. I think they mentioned a little bit of slower subscriber growth, which I don't know if those exact words have ever come out from them before on prior earnings calls, but I mean, it's kind of understandable if they saw a big ramp up during the initial sort of lockdown period. It makes sense that as things relax a little bit, that that would tail off. So I don't know. It seems like it should have been expected, but I guess maybe not. Caught people off guard. All the way down under 400 now. So this is a steep drop from 700 or so that it was maybe 5 weeks ago. Yeah, so pretty bad times for Netflix. Microsoft was the outperformer this week, if you can call it that. It was only down 4%, basically in line with the overall market. It was a little better than the S&P. It was definitely better than the NASDAQ, but kind of with the Dow being 4.5%, kind of a blue chip tech company. Same thing, Apple down 6%. That was basically in line with the S&P and tech. And then the rest, Amazon has been quietly struggling. I know it hasn't quite been the worst performer on this list for several weeks, but it's been a steady underperformer. And down 12% this week is another one that another week to forget for them. Down under 3K for. I don't think it's spent a lot of time under 3K in the last year. If it did, it sort of spiked down maybe 2,900 something and popped right back up. But down here, it's looking like people just don't want these stocks anymore. But we'll see. That can all change pretty quickly, as fund flows change, because these ones attract the most capital. If that ever turns. So I'll jump into our industries and week to date. Yeah. So aside from the indices getting hit, the breadth was poor overall. So, okay, healthcare, I'm just going to skip right over that because it's always the worst performer, seems like. So tech was the second worst performer, down 7% on a median basis, and then everything else even wasn't far behind. So services, industrials, consumer, even materials got hit despite oil hanging on. And then utilities a little more stable, but still down 2% is kind of a decent move for them to the downside. As far as subsectors go, basically nothing was up. So silver and gold were up fractionally. And then, okay, foreign utilities, I'm just going to throw that out because no one owns foreign utilities. And then as far as worst performers go, yeah, there was just a ton of sectors down, even double digits. So what do we have here? A bunch of semiconductors. Okay, nuclear continues to sell off. Weed sector still selling off, kind of meme type names. Solar is another one that was big momentum sector, and EVs same vein. So let's see. This is 25. This is 50. 75. 100. 125. So 135 subsectors were down over 5%. So that's like that's a really horrid week for stocks. I don't think in any of these recaps we've had anything that was even really, I don't know, even double digits down over 5%. Maybe we did 1 week or so randomly, but for the most part, this has been the worst. This was the worst week for stocks in a long time. So if we jump into Screener, we can just look through them on strictly cap weightings. And okay, 1 to 5 billion, down 7.5%, and 5 to 10 billion, down 6.3. Large caps down 5.3. So it's only marginally better. Okay, mega caps down 4.5, so basically in line with the market, and Terra caps down 4.9. Probably a little bit more of a drag just because of the exodus from those that leadership group that I have in the watch list. So not great across the board. Bad breath on a sector basis, bad breath on a market cap basis. More or less total liquidation of stocks all week. On Friday, we thought that we were going to save a little bit of the performance for the week. I mean, not save it, but at least it was in the morning. It was looking like Friday was going to possibly start a bounce, although everything ended up giving that up the rest of the day anyway. We sort of reflex bounced in the morning and then just bled off the rest of the day and flushed the close just to put a nice cap on the week. We do possibly have some hope. Our 12-month hybrid oversold signal has now clicked 2 times. So we have Thursday and Friday both on 12-month hybrid oversold. These signals don't cluster very often. So when they do, it's usually around, there's obviously high volatility in the market, but it's usually when the market is trying to hammer out some sort of bottom or swing low. I can show you on the, okay, let's go to 12-month. 12-month hybrid. Okay, so you can see there's 2 signals here from this week. Then the rest of the time, there were 2 back here in September, actually 3 back here in September to close out the quarter. And then the only other times they were just single prints. And then going back further, we had a bunch of them in this March 2020 sort of area, March, April 2020 during basically the height of the COVID fears and, initiating the lockdowns and all of that stuff. So it takes a lot to register this 12-month hybrid oversold signal. Those are sort of the stress levels, the market is seeing overall on a quantitative basis. And then what should we expect from a signal like this? We should expect something like a 3% bounce in the next 2 weeks. So this would be up 3% from where we were on Thursday when the first signal hit. So the market obviously traded down since then. So you'd be looking for an even bigger rally from the current level. So based on all of that, and this is going to just sound like, just buy the dip. But for next week, I think any weakness you see early in the week, you basically have to buy it for at least a reflex bounce. And then I would expect the rally to stick for at least into month end. Now, is it likely that we're just going to wash all the way down through the end of the month from here? I don't think so. So like I said, I would expect a pretty sizable bounce to come. We'll see how convincing it is when it does come, and depending on what that looks like, we may just have to sell into that on the way up. But one step at a time. So I'd be looking for a bounce next week to start fairly early, Monday or Tuesday, and then from there, it's anybody's guess. So it's high volatility. Obviously, manage your trades, manage your exposures correctly so that you don't get into some sort of catastrophic scenario for yourself. And bad week, but maybe there's some hope. So thanks for tuning in, and we'll recap next week and see if any of this materializes. Talk to you later.